Hey guys, Tim here, 5 a.m. your time over there on the East Coast in the States. I wanted to do the video on the weekend, decided not to because things were getting really heated up and it was a long weekend anyway. So here we are. Obviously, the war started. I just want to go over this because there's a lot of people that have never experienced this and a lot of people that have forgotten about it because it's been so long. January 4, second day of the year, hit our all-time highs. From that, we had our sell down. People are forgetting the fact of how high we ran off of COVID, how high we ran off of Joe Biden, how high we ran off of Donald Trump. I'll show you in a little bit. Profit taking. It's all that it is. Now, here we go. January 24th, we hit that 422, 222.62. It was a 12.37% drop. Then we had our little bit of a rally. Rally was 4.46%. Then we had our drop off of that Wednesday. That Wednesday, we hit our high, January 26th, and we closed for the first time in over a year lower than 10% from the all-time high. That was on January 27th. Went ahead, again, that was being the Wednesday. We bottomed out on the Friday. From that Friday, we had a 3.87% rally into Wednesday, 45.95, February 2. Off of that, we had our 3.1% drop going into whatever, Monday, Friday. But you get the fucking point. You've been around. Wednesday, boom, drop. Wednesday, boom, drop. Now, here we are. OPEX failed. The weeks that OPEX fails, we always get that sell-off right after OPEX. Same thing like you had over here in January. January, we failed on OPEX. We didn't take out the all-time high. Boom, the very next day on Monday, we went and hit that bottom. Back here on January 26th, when I was talking about this, I mentioned 4150. 4150's been there for a very long time. Very, very long time, 4150's been there. I've got to go through the email, but you can go through your emails. You can see back on January 26th, FOMC day, we're talking about 4150 possibly being where this comes to. Wave 4 4, final wave 5, hunting 4150 plus or minus 20. January 27th, mentioned it again, blah, 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 blah. February 1st, again, mentioned it after we had already had that 7% rally, 4150. Highly likely to be in the cards. It's still there, blah, blah, blah. We went too high. We went too fast. Like I showed, we still had that projection going there. Wave 3 of 3 completing against 45.20. 45.45 is what we needed to get up and get up above. Obviously, everybody was around. We failed that when we came back down and we popped up the very next Wednesday. Again, did the same thing. Bearish, wave 4, major C, major 4, completed on this bounce. We're looking for the fifth wave, going down to 4150. We're still in a bull market. You get the point. So here, I want to bring you, and I'll start back because I did this video and I ran out of time. I threw this out to you on January 28th. We're going to go up. OPEX, going to go back down. I expected OPEX, as we have for 5 years, to produce the OPEX high, the high of the month, which meant higher than 45.95. We had that gap up above there. We have the higher gap up above that. We failed. First time, 5 years, we failed. First time in 5 years, the OPEX pattern failed. I expected us to come down here to that 422 area again as we go into the FOMC meeting in March. Could not in January have fucking predicted that you were all going to be learning where Ukraine is on Google Maps. Couldn't see it, couldn't predict it. I was obviously wrong by a couple of weeks that we were going to come down to that because we came down to it yesterday. Roadmap to 5,000, that's off the fucking table, and I'll show you that in a little bit here. Here's your wider picture, okay? 2016, you bottomed out there in February, 3 months after, or 2 months actually, after Janet Yellen raised rates for the very first time since the financial crisis of 2007, 2008. 14.5% drop that we had into that. That was mainly on oil. And then we had our rally going up into January. 28.72. We had our first little correction there, 11.5%, which lasted only a couple of days. Rallied on up. I'll show you the double bottom on that. Up into September. Finished our fifth wave. That was your wave 3. This is your wave 5. That was your wave 4. Boom, boom. Had your 20% correction coming down there into Christmas. From Christmas, January 2018, up until COVID, you had your last little ending fifth wave rally. Up, down, 1, 2, 3. Everything's completed perfectly. No corrections of anything large at all. Bam! 35% drop on COVID in less than 3 weeks. We had our correction starting in June, which was where it started to look like wave 1 and wave 2 had finished, but it didn't actually fit. And then when we took out the COVID highs in September, and then we had our 10% correction, it fit. Everything fit. That was our wave 1, our wave 2, and wave 3 was going to be looking to take us somewhere up into that 4,700 area. We got 48.18. So again, zooming in, showing you here corrections because it's been so long and they're so rare. Here's your 2018 correction, 11.84% drop over the course of a couple of days. Bam, went up there into February, had your OPEX high. The day after, this was a failure, okay, February, because February started way up here. So in any case, you went up there, boom, produced 27.89 the week after OPEX, had your little bit of a dip, went up there to 28.01 on the start of March, came down, had your double bottom right here at the beginning of April. Double bottom, off by 20 points, and then your slow move up until you got up there into September, which a lot of you guys that were with me all remember, I had 29.31 as our top. We got 29.41. This is here in 2019. So you see here in April, May, you had your little bit of a dip. I didn't calculate it. No idea how many percentage it is, but it ain't 10%. Then here in June, boom, had your dip, multi-bottom there, 6.8, 5.5% dips. This was going over the course of May, June, July, August, September, October, and then, boom, 2019, you started to take off a little bit. Come down here, and we're looking at June of 2020, and this was where it kind of started to look as if it was wave 1 and wave 2 finishing, but it didn't. It didn't really fit. It looked like it, but it didn't fit completely. So anyway, you had your June high, 8.27% drop, failed over there on OPEX, came back down, quasi double bottom off by 30 points, and then off into July, and we'll get into where we're going into next. Here's September. September is after you took out your OPEX high, your COVID high. So we've taken out the February 2020 highs, 35.81, boom, 10.5% drop. OPEX, produced your OPEX high, boom, perfectly, bam, had your drop. Double bottom almost, 32.34, 32.09, 8.9% drop. And then as you all remember, November 9th of 2020, Joe Biden became president and Pfizer cured the world of a virus that has a 99.8% survival rate. So here we go. We're tracking here, looking at a 1-year chart, right? Just looking at 1 year here over where we are right now. We went up here. We had our wave 3, 45 and 45. Had our dip over there in October. That was our wave 4. And then we had our final wave 5. Boom, boom. Failed it because 48.18. We were expecting to go a little bit higher than that. Failed. Boom, you've had your drop. 12.37% drop into the January low. 8.13% drop as of yesterday on the actual double bottom, assuming that we do open in the green and don't open in the red like we are trying to actually bounce, with the S&P up over 40 points from the lows so far. Crude oil just a couple of pennies off of 100. This is Crimea. This is when Russia went into Crimea in 2014. Okay. This is what happened to the S&P 500 during the 14 days or 24 days, however many fucking days it was a month long or some shit like that. And this is what the S&P 500 did. Didn't give a shit. And we shouldn't be either. Because, again, it's a correction after running over 100% off of the COVID lows, topping there in January, and then having your fucking sell-off come off of January. It is a correction. That's it. Here's Trump. Trump won. He had a 37.86% run up into January, and then he had an 11.84% drop. Biden won. He had a 34.48% rally and a 12.37% drop. Are you starting to see what you're not seeing because everybody that's posting everything out there is talking so much fucking shit? It's a correction. That's all that it is. Here's your VIX, okay? We're lucky enough to be one of the few that understand when the VIX is up at 30 plus, you buy the dip. You buy the dip and the S&P 500 has its rallies. Here's your S&P looking at what we're looking at right now and only right now. You had your decline. We've dropped an enormous amount of pivots and big points, 100% off the COVID lows, 10% correction line. We've got our double bottom here. We've got our very first Fibonacci retrace going back to the COVID lows right there at 41.98. The 50% retrace is right up here at 45.20 still, retracing the bounce. And what we had happen yesterday or today was the 50-day and the 100-day moving average crossed over. It's not a good sign, but it's typically a sign that you're coming to the end of it. 200-day moving average is still up here where that first of two gaps is, assuming that we don't gap down today and have a third gap right up there at 45.60, 45.55. And that was the reason why I chose to take my small position on those 445 calls for next week. Here, looking at SPY, you got a much better picture. You've got your first gap up here from going back in January. You've got your gap over here from 2 weeks ago. And this is your gap that you've got right now with 420.76 being your low that you had there in January. So right now, yes, I'm looking at SPY. It's 414.14 on my main screen. It was 414.51 when I took the screenshot. We want to see 420.76 get repurchased. We want to see the gap get filled. We want to get back over above the September lows at 425.65. We want to get back up above the 10% line at 432. And when we get up there into that 445 area is when we can start assuming that the correction has completed, and we'll have a lot more data to go by when we do get to that level, because everybody's been in a market for more than a year where everything constantly goes up. You've got to be reminded that corrections happen and corrections are healthy. It's like having a cheat meal for a bodybuilder. You're eating protein and eating clean for so long, you've got to go eat a whole bunch of shit so your system cleans itself out and it likes that protein more than it was liking it because you were giving it to it every single day for every single meal. So from a 1, 2, 3, 4, 5 point of view, very close, because again, we're still in a bull market. From an ABC point of view, yeah, you could go down here to around that 399 level to make a perfect C equals A. Not required. You're already 15% from the all-time highs. You've only been 15% from the all-time highs once, which was in the 2018 correction that was taking place, which everybody knows why that was happening. But anyway, here's on the QQQ, and I don't have the gaps, but you can forget about QQQ in the 400s. Forget about that. It ain't going to happen. All right. But you do have a very clean looking 1, 2, 3, 4, 5 setup here. You've come down to the 38.2 retracement, okay? The 38.2 retracement to the COVID lows. But more importantly than that, here at 317, here at 315, and I've got it over here as well somewhere. I've got to go look on my other chart. You're at the 23.6 retracement to the 2002 bear market lows, and you're at the 2021 open right here. So you've wiped off the entire year. You've obviously already had the crossover on the 50 and 100-day moving average. The 200-day moving average is about to get crossed in about a week, right up here at the 10% line. So the NASDAQ, that's your weak line. That's your weak point. It's going to stay your weak point. This is the .com, okay? And I want to bring you to the .com because this is where I see us being, is here, because of how euphoric the runoff of COVID went. We went up here, we had our highs right at the end of March. Then we had our dip, 13.75% over 15 sessions. Then we had that choppy upward rise as we came in here into September, and we failed the fifth wave. We failed to take out the .com highs. And then we began our sell-off of 50% that everybody knows. It bottomed out in 2002. This is the NASDAQ of the .com. And you can see here, obviously, same exact date for the .com high. And it sold off 40% because you had a whole bunch of companies that were complete shit back then. But then it's very clear how this failed back in September. And then obviously went off and sold off. And I haven't actually charted the NDX to see how deep the sell-off was when it came down in 2002 and 2008. But you've got, I mean, I'm looking at NVIDIA right now. The lows on NVIDIA this morning were 40% from the all-time highs. Tesla's 40% from the all-time highs at the 2021 Open. I've got to go look at some other screens on some other. But the point being, the NASDAQ is your weak point, and the NASDAQ is where everybody is focused. Cathie Wood, ARK, it's going to go completely fucking bust. It's going to be the Bear Stearns of this century, of this decade, is what Cathie Wood's ARK is going to wind up being. It's going to wind up being the Lehman Brothers. So what you learned for so many years about tech and putting all your money into tech, forget about that. It's done, all right? Where we're at now is a couple of months from a little bit more clarity of upside, and a couple of months after that, you better have a fucking big container filled with canned goods because the shit is going to wind up hitting the fan. So I'll see you guys in the chat room.